Hey everybody, Courtney Smith here with you know what it is. All right, let's get right into it. And of course, you know what this is too. It's unbelievable. The plot is a little thin, the characters are poor, but the action is unbelievable in this disclaimer. Okay, let's get right to it. Wow, wow, wow. Look at this thing skyrocket higher. Notice how even the purple predictor is moving even stronger than the S&P. We've been talking about this for 2-3 weeks now. This thing is all clear. Let's just rock and roll till the end of the year. Maybe get a dip in January. But right now, other than a little squiggle here or there, this should be all clear in the S&P. How about the Dow? Well, look at that top little green line. That shows buying pressure, and the red line shows selling pressure. There's lots and lots of buying pressure in the market right now, and just not very much selling pressure, and that's giving us this big bull market. How about the Nasdaq? Whoa, straight line up. Same thing. Have I made it clear? This is a bull market. You got to be long, you got to be strong, you got to be getting longer, and you got to be getting stronger. Seasonality, bullish, bullish. No question about it. It is bullish. What about our pattern? We're in the fourth quarter. Things are rosy. Things are going to be great. Look for this market to maneuver higher. Have I made this clear? I'm bullish. All right. Yield curve. Releasing the pressure. Look at that. It was coming up in November. The yield curve skyrockets higher. That's going to help our market out a lot. Asset allocation. Money's being sucked into the stock market out of the bond market. That's providing new liquidity for buyers of stocks. How about the risk indicator? Yeah, the market wants risk. And when it wants risk, that means stocks go up. Now, global shares, good, but I'd rather be in the U.S. right now. How about emerging market shares? Well, they kind of took a hit there. I'm still bullish on them, but I think this next rally up is time to take some profits on the emerging markets. As you know, we've been in them for a very, very long time, so this market is looking good for us. Bonds, that's where the crapola is. Look at this thing. They're much weaker than I anticipated, quite frankly. I thought the purple predictor would keep them up stronger than they've been, but instead, crapola. They're looking bad, and the money's being sold in the bond market, and they're buying stocks with it. So, look, I can't really see this going much lower. The purple predictor is bullish. We're just above support. So I really don't see us getting below 122, and I really think 122 to 123 should be the temporary low in this market. Bond key factors, still saying higher interest rates, but look at the blue line. The green line is the 10-year Treasury yield, and you can see it bounced up sharply. The blue line has been the most dominant factor for the bonds for a few years now. The blue line is the 10-year Treasury yield in Germany. And you can see it bounced up, but then look how it's run out of gas the last couple of days. So that kind of tells me we're going to run out of gas in 10-year Treasury yields as well. And so we should see some support in the market here. Not that I'm looking for a big rally, just not really going down anymore. Now, let's go back here. If interest rates are going higher, then that should attract money into the United States. And sure enough, as I've been mentioning now for a month, the US dollar is moving higher. Now, I haven't developed the thesis yet that this is going to be a major bull market, so I don't want to get too crazy about this, but I've been saying now for 2 months that the bear market in the dollar is over. That is a fact. What we should do is actually go sideways for a while, kind of consolidate this big move down that we've had. Well, if the dollar's getting stronger, that must mean that gold is getting lower. As you know, a couple weeks ago, we got out of our theme of long gold, so we're not in the gold market at all anymore. Looks like a big trading range right now, but it looks like gold will be on the defensive over the short run. Now, our indicators, look at the top one, bearish. Look at the middle one, let's call it neutral. The bottom one has been the killer, and the bottom indicator is the yen, the dollar yen. And as you can see, it collapsed and dragged the price of gold down with it. But notice that it's starting to stabilize. I talked about this last week. So I think our dip in the gold is pretty much running out of steam as well. Maybe one more week now, but generally speaking, look for this market to start to stabilize as well. Oil market, collapse-orama here on Friday, collapse-orama the Monday. So it's not a good market for the oil market. As you know, I don't want to say I'm a big bear, but I just do not believe that we're going to see a big move up in this market at all. So what does that mean? It means you should subscribe. It's pretty obvious. We've been calling these markets awesome. People who are the fully paid up members who get to sit with the cool kids, they know we're making money on our specific recommendations, which is why you need to be a subscriber. But if you're not, that's okay. We love you anyway. And we will see you, freebies, we'll see you next week. And all you super cool, fully paid up members, just hang on for just a minute here.